Let's take a look at the sales journal and why we use it. What do we need a sales journal for? We've spoken about the cash receipts journal. We've used the cash receipts journal to record sales. Why do we now need another journal? Why do we now need a sales journal? What we need to remember is that the cash receipts journal only captures and records sales that are made for cash. So cash that's going to be deposited straight into the bank account goes into the cash receipts journal. Remember, everything that we did when we processed the cash receipts journal was deposited straight into the bank account. So-and-so bought stuff, they paid in cash, it was deposited in the bank account. The cash register roll, the money from the cash register roll for the day was deposited in the bank account. So all the transactions and all the receipts that affected cash went straight into the bank account. Credit sales, when you sell something to someone on credit, doesn't have an immediate impact on the bank, which means we can't use the cash receipts journal to record these sales because there's nothing to put in the bank. But I've got to record the fact that someone just took something out my shop and someone just took something from me and they haven't paid for it. So I want to give them an invoice. I want to make sure that I've recorded the fact that I have made a sale, but I don't have anything in the bank. So what we were looking at this for, and what we were doing with this, is we were saying, we were creating journals where we said we're selling an amount and we're making a sale for 100 and we are putting 100 in the bank account. Okay, so remember, all of our journals can be debits and credits. All of my sales journal, CRJ, CPJ, remember right in the beginning we said all of them can be done using a general journal, using your debits and credits. So that's what your CRJ is for. The problem is, what we're dealing with now is a situation where I'm selling 100 rands worth of goods, but there is no bank. I am creating a debtor for that particular amount. I'm debiting the debtor. So there is no bank impact here, which means I can't put it in the CRJ. So in this case, this particular transaction would go into the CRJ and this one would go into the SJ, your sales journal. Let's take a look at what it looks like. Your sales journal, keep in mind again for your details, making sure that you know what it is that you need to do in an exam. You've got your sales journal. You notice that you talk about the month, the sales journal for the month, and then at the top of the sales journal you number it. Just the same as the cash receipts journal, we number it, and this is SJ1. So that is the first page of the sales journal for the month. We have columns for the invoice number. We have a column for the day of the month. Remember, we've mentioned that it's August already. We've mentioned the month already. So we have a column for the day of the month. We have the details. This will obviously be who we're selling that particular item to or who we're making the sale to. The folio is what we've been using when we post the items to the ledgers. We have VAT output and sales. So our sales itself, and then we have the VAT output. Remember, we've spoken about VAT. All of our transactions, most of the transactions you're going to be dealing with are going to be dealing with VAT. In which case, we're going to have a little transaction. We're going to have a column in here to record the VAT. And then we're going to have our debtors control. So this indicates then your debits and your credits, and this indicates the fact that your debtors control records just how much the purchase is for. Let's take a look at an example. Here's an example. On the 4th of August, there was a sale to the debtor or to a debtor on account ABC Supplies, invoice S132 for 14,250, VAT inclusive. Always note how they talk about the amount. Is it VAT exclusive? Is it VAT inclusive? Are you dealing with VAT? In this case, they're saying to you that the 14,250 already includes VAT. So this is the total value of the sales invoice, the 14,250. So when we take a look at our sales journal, you're going to have to show me that it is August. You're going to have to put in your sales journal 1, your document. Your invoice number is S132. We've got from there the date, the 4th. We give the company that has bought the stuff from us, or the people that have bought the stuff from us, in this case ABC Supplies. And then you're going to have to calculate your VAT. So in this case, because it says VAT inclusive, it means that the total amount of money that your debtor has to pay you, the rand value that your debtor has to pay you, is 14,250. So our VAT inclusive amount goes into my debtor's control, because that is the total amount of money that I expect ABC Supplies to pay me. If you go back to the discussions and the videos on the VAT amounts, you'll remember that the VAT inclusive amount I said to you was basically 114% of the amount. So your VAT inclusive amount represents 114% of the sale. the amount of the sale that I'm actually taking out of this, I want 100% of that sale, right? And the receiver says he wants an additional 14%. So go back and make sure you can do those calculations, because you're going to have to now calculate what the VAT is, or what the amount is excluding VAT. So we've given you the inclusive amount. You make sure that you can get to 12,500. Make sure you can get to the exclusive amount and the VAT amount. And always keep in mind where your 14, your 100 and your 114 comes from. So this is 114% of the amount that you are dealing with. So we would say 14,250 divided by 114 multiplied by 100 would give you your exclusive amount. 14,250 divided by 114%, or divided by 114 multiplied by 14 is going to give you your VAT output. Again, be very careful. You've got to get these columns right. So in terms of our sales journal, that is what your sales journal is going to look like. When we post that to the general ledger, let's take a look at what we're dealing with. When we post to the general ledger, all of our totals, backwards. If we take our amounts, notice your folio numbers, your debtors control, your VAT output, and your sales. So we've got 3 different accounts that we need to make sure we've taken care of. My debtors control indicates the amount that people owe me. We've dealt with the trade and receivables, our debtors controls a little bit before. Again, pay attention to the detail of the folio that it's coming from, and notice that we're creating an asset. We're creating a debtor of 14,250 because this is the actual money we're going to get in the bank. When we credit that to 2 separate accounts, showing that the sale itself was for 12,500, and that is your nominal account, that is your sales. Your VAT we owe to the receiver. So this is a VAT output account, and this indicates pretty much a liability that we have to owe, and we have to pay the receiver of revenue for the 1,750. Make sure that you never include the VAT amount in sales, because it's not your money. You've taken 100% of your sales. The receiver wants an additional 14% to go to him. So we show that 14% separately in our VAT. Again, be very careful. Make sure that your debits and your credits add up. 14,250 on the debit side, 12.5 plus 1,750 gives you your 14,250. So your debits and your credits still line up. They still match. So make sure you're very comfortable with the need for your sales journal, with the need for your debits and credits, and again, make very sure you can calculate all of your VAT amounts.